Good afternoon. I'm Robert Mays with BlueCreek Investment Partners. Thanks for checking in. Well, it's harder and harder to be a bear in this market when you consider the stock market rally that has been going on now since March of last year, and the improvements that we're seeing in the economic news, the developments that are occurring across the board. On Friday, even though it was Good Friday and the market was closed, we heard the jobs report that showed that there was an additional 168,000 jobs created for the month of March. Now, there are two pieces of this. One is that 48,000 of those are temporary jobs for census workers, and that will also spill over to the month of April once we get that number. But I would say that overall, this is a very positive number. Number one, because we've been looking for an increase of jobs for quite some time. It's the most lagging of all the indicators that we have in terms of showing us the direction of the economy. Well, maybe barring one, and that's commercial real estate occupancy. But in general, this is a very strong number because it helps support the fact that if people get back to work, they'll be able to make their house payments, be able to cut down on debt, and even be able to start spending again. There are two other things that showed up was the fact that both the manufacturing and the service sectors both expanded for the month of March. Again, not just simply the number of job growth, but we're also seeing this start to begin to have broad support across many different industries. The total hours worked increased by 0.2 of an hour to 33.3 hours per week, which is encouraging because that shows that not only as people are gaining employment, but they're actually getting to work a longer work week. What was, I think, the capping quote, though, for last week was by Robert Hall, who's the head of the National Bureau of Economic Research Business Cycle Dating Committee. That's a long title, isn't it? But this is the group that essentially officially states the beginning and the end of recessions and various other stages of the economic cycle. And on Friday, he announced that this job report was so strong that it was pretty clear, in his view, that the recession is over. Now, it went on to state that it may be close to a year, 10 months to 12 months later before we finally know the so-called exact date as to when that recession is over. But again, it was one of the last telltales, if you will, of all the economic news that we needed to have this one piece of the puzzle to put in there that is showing that this rally and the recovery and the economy in general can be sustainable for quite some time. Well, thanks again for checking in, and look forward to talking to you next week. Bye.